Hey everybody, Derick Van Ness here, investor, wealth strategist, and life adventurer, and I've got something for you today that's so vital, and that is, how do you know if you've got a tax professional or you've just got a so-so advisor, right? The way that I try and classify them is we have tax recorders and we have tax advisors. Tax recorders are the people who handle the past. Tax advisors who are people who are working with you in the present and into the future, right? And let me just tell you a little bit about how I learned this. I literally was on the phone within the last day or two with a client who they paid a large sum of money to a financial firm who was a tax strategy firm, and they were going to help them with all this stuff. And they did that a year and a half ago. And now their taxes are coming due. And literally the whole point of their plan was take a bunch of money, put it in a qualified plan, and you'll save taxes. But here's the thing, that's not tax strategy. They didn't do anything proactively. They're still going to have to pay those taxes later, and the trajectory of this business that this person's working with is going straight up. So it's very likely that they're going to be earning a whole lot more money in the future than they are right now. So what do we want to look for when we're looking for a tax strategist and a tax planner? Before I get into that, I just want to remind you, if you're getting good value out of this stuff, if you're liking what we're doing, please, we need your support. Smash the like button, subscribe, hand this off to other people. If you know anybody who's overpaying or who's paying more than $15,000 a year in taxes, there's a really good chance that they're probably missing something. The tax code's like the size of the Harry Potter book series, so it's a lot of words. Nobody knows the ins and outs of it, but if you suspect that your person or you know somebody who's paying a lot and possibly overpaying, it's worth getting a second set of eyes, and that's something that we can help you with. So anyway, how do you know if you've got a good person, if you've got a tax advisor or you've got a tax strategist? So a couple of simple ways to do that is, the first one is if they aren't proactively meeting with you throughout the year. If your relationship with your advisor is, hey, I'll show up, I'll give you a box after January 1st, you'll file it before April 15th, and that's our strategy. They'll just tell you, hey, put some money in your 401k or your IRA or your SEP. That's probably not what you're looking for. So the real question is, how do you know if you've got a true tax advisor, a pro, or how do you know if you've got a recorder, right? Well, the simplest way, the first way that I would say to know is, are you meeting with this person throughout the year? Boom, 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 at least 2, 3, maybe 4 times a year. Because if you're only going in and saying, hey, here's my box of stuff, or here's my QuickBook files, tell me what I owe, that is just a tax recorder, and I promise you, you are leaving a ton of money on the table. How do I know that? Because there's a ton of stuff that you can only do before December 31st. So if you're doing it between December 31st and April 15th, it's definitely not tax advice. It's just recording, here's what happened, we're gonna do the best we can. You're definitely leaving money on the table if you're in that boat. However, if you're meeting with a person once a quarter or 2 or 3 times a year, especially the second half of the year when you can look at them and say, hey, here's how much money we're making. Here's some of the things that are going on with the business. Here's where we think we're going to be by the end of the year. How do we optimize that? Or how do we do the things this year that will minimize our tax burdens or pay taxes now and save us a ton of money in the future, right? People always want to pay taxes later, but that's not always the best choice. So you want to be really honest with yourself. So if you're not meeting with your tax person periodically throughout the year, you've got a tax recorder, and we definitely want to do that. Another really easy way to tell whether you've got a tax recorder or you've got an advisor is an advisor will be coming to you with things saying, hey, so-and-so, it looks like you're doing X, Y, and Z with your business. Have you thought about this way? Or if we structure it this way, or if you pay yourself this way, or if you pay for the equipment this way, or if we get a loan that way, or if we prepay expenses or whatever, if they're not coming to you proactively with strategies, coming to you saying, hey, why don't you do this? Why don't you do that? You probably have a tax recorder, even if they're a good recorder, because every business has different opportunities throughout each year. And at different stages of growth, the sophistication that you need for that changes quite dramatically. I work with CPAs and firms that are designed to help people who make $50,000, $100,000, $150,000, $250,000. And then I have firms that are worth that are working with people who make $500,000 to $3 million a year. And it's a totally different strategy, the things that they can do, the way they move around cash. So if you don't have someone who's proactively coming to you and saying, hey, here are some things to consider. Here are some things you should be doing. Here's a way to structure things differently. You probably got a tax recorder. Okay, so what you're looking for is somebody who will answer your questions, will proactively meet with you, and by proactively meet with you, they know what's going on with your business, and they'll be able to give you advice. And it doesn't mean that they're always right, and it doesn't mean they know everything, but if you don't have somebody who's looking for ways to save you money, you're probably missing the boat. There's a ton of really great CPAs out there, and there's a ton of them who are okay at their job. You don't want the okay at their job because they're costing you so much money. I've said this before, but what we've seen with clients is per $100,000 of income for small business owners that we've worked with, they're overpaying more than $11,000 a year. So if you're making $200,000, $300,000, $400,000, you're probably overpaying $20,000, $30,000, $40,000 a year. Where I come from, that pays for a lot of vacations, a lot of college, a lot of things that we want to be able to pay for in our lives. There's no reason to give that to Uncle Sam. And I'm not talking about doing stuff in the gray area. I'm talking about legitimate things that you can do with a little bit of planning and a little bit of strategy. So I believe one of the best investments you can make is in a good tax person. We work with some people that are great. I hope that the person that you work with is just how I described the advisor. But if you've got a tax recorder, it might be worth checking into another set of eyes on that. If we can help with that, let us know. But get it in front of somebody who's going to proactively look at it, who's going to give you fresh ideas, and is going to help you to optimize that. Because every dollar saved in tax is the same as a new dollar earned. So it's that valuable. And the more money you make, the more valuable this gets. So my name's Derick Van Ness. I appreciate you stopping by. If you like this content, please smash the like button. Subscribe, pass this on to anybody you know who's overpaying on taxes or is paying at least $15,000 a year, because most of those people are paying too much and I don't want to see it. My name's Derick. Thanks for stopping by. We'll see you on the next video.